Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. I am half of the Money Masters, and great Friday morning to you. Right now, you've got the Dow trading down 132, S&P's off 14. You got the composite down 31, the NDX off 25 points. And now, if you want to catch the other half of the Money Masters, all you got to do is go over to Orlando, pay him a visit at the Gaylord Palms at 11:30. Tom is going to be doing a book signing. It's the World Money Show that's there, and you want to go to the Traders Press booth, 11:30. If you've got your book, go ahead and bring it. If not, simply go ahead. There's books there that you can buy, plus along with the book. So this is a great deal. You get two free workshops. They're not free. You get two workshops. But for buying the book today, it's free, and it's only today. It's only at that event, if you will. So if you're in the area, stop in, and hopefully you're watching Tiger TV. At 11:30, you can be watching Basil Chapman. So, and then what we want you to do is I want you to go there. I want you to give Tom a big bear hug. That's how you say hello to somebody. He can shake their hand. He can shake anybody's hand. Go give him a big bear hug. He's a bear, if you will. Dow being down 130, and King Dollar. That's what it's all about. King Dollar has punched through the area that it was retracing down to. Now, if you take a look at King Dollar here, all's not all. And the King has left the building. King has left the building. He's driving, down I-4 right now on his way over to the Gaylord Palms. And if you just simply take a look at the retracement, you're taking a look at a much longer-term channel that I show King Dollar being in. But if you just simply go to the October 27th low, when the King Dollar made its the low there of 74.86, moved all the way up into the highs here on January 13th. As it was doing that, we had a butterfly pattern. And so if you go from that low all the way up to the high, and you take a look at your first retracement, 79.30. King Dollar trading out at 79.21. It is still underneath that area. So, a King Dollar, to prove itself to me, has to get back inside that range and say that all that it wanted to do was just a little bit more than a 0.382 retracement. If it can't, then what King Dollar will come down, will come down into the 77.60 area. So it'll be important to watch where King Dollar finishes the trading session. If it continues higher, we'll see the markets move lower. 877-927-6648. Folks, what is really cool, and it's this way about life, and that is this, that what's talked about is a dream. Well, you think about, we talked about doing the Go Long America program several months ago, and then we actually did it. Tom came up with the program, and part of that Go Long America, was envisioning having folks go out, help themselves, help others, and then the vision was our ability, Tom and I, to be able to go travel to some of those cities just to say thank you, to give you now. I'll give you both a bear hug and a bull hug, if you will, when we see you. And we finally, so life is about making a dream, and then it's about envisioning it so that you've got excitement, if you will, and we have that. And then what's planned, folks, becomes possible. What's possible, that becomes reality because you schedule it. Well, we've scheduled our Go Long America tour. On February 21st, we're going to be in Denver. Everything will be up on the site by the 4 o'clock show today. On the 22nd, February 21st, that is a Tuesday. On the 22nd, we'll be in Spokane. The 23rd, in San Francisco. There will be a few other cities named here, but that is going to be the West Coast swing, if you will. I believe we're going to end up being in Boston, and we'll probably do a show here in Tampa or Orlando as well. And so we're looking forward to coming out and growling and prowling with you. And February 21st is actually kind of a cool day, from the standpoint that should be a day of fireworks in the marketplace. Number of things that are going on. My clients know because of the information that's contained inside the newsletter, so they know that February 21st is a big day. Just out of coincidence, happens to be the day that Tom and I will be in Denver. So we're looking forward to seeing you. Please go over, sign up for it. Again, we'll be up there later on this afternoon, and do us a favor here because if we know a lot of folks, it's free, so there's no cost to come and attend. It's going to be a 3-hour that Tom and I will split up the 3 hours, if you will. So it's going to be a 3-hour workshop. Absolutely going to provide you with absolutely great information. But if you do sign up and you can't attend, please send us an email or give the office a call, just simply so that we can take you off the list and we can do the proper thing as far as planning for the size of the room. So let's go look at the markets again. You got the Dow's off 136 right now. We'll take a look at what's popping, what's dropping, or you can give me a call. And what I'm going to do here is go take a look at the ETFs for the four indices. We'll take a look at the diamonds, the Qs, take a look at the small caps, the IWM, and the SPYs. Now, what I've got up on my screen here, we're going to take a look at 30-minute charts. Just simply step back just a bit, see what's going on a 30-minute chart. So let's take a look at the Dow. That's the headline number, if you will. And right now on the diamonds, the DIA traded out at 127.40. Now, what you can see is that we gapped down this morning. And when you gap down on the diamonds, you were coming into the swing point here from October. You were coming in from the swing point of, I'll find the date here on this, February 7th. Thank you. February 7th at 10:30 in the morning. At that swing point, you did 632,000 shares. The low on that swing point is 127.55. Now, when you gap down to that first 30 minutes of trading from 9:30 to 10, what you did is you did a little over 1 million shares. Now, you can see I've got the line drawn across here on the bottom. So that shows you the volume coming to the swing points. You closed below it. You came down into it with volume. What that says is it still wants lower prices. You've got sellers in there. You come into a swing point with volume. In this case here, you close below it. It says you want to seek out the next area. Well, the next area out here we can take a look at is where this open gap is. The gap that took place between the close on February the 2nd and the open on February 3rd. Now, we know that this area here is going to be important, that close. Why? Because the markets really took off a week ago today, February 3rd, if you will. There was some conviction, maybe not a ton of volume conviction behind the move. There was absolutely price conviction behind that move. And what you can see there at that swing point, coming into that area where you'd be closing the gap, you have 493,000 shares. The swing point range on that is from 126.79, that's the low, up to 127 even. So you only got 36 cents more, if you will, on the diamonds to get down there. If we start taking a look, trying to identify some areas of high volume, well, here's where you'd be looking at, folks. You'd be looking at going into the 4 o'clock session on the, got to see if I can switch the, on January 25th out here. And you can see that what you did was 2.4 million shares. So you are already trading down below that. So that wasn't enough to hold that. The high on that was 127.52. The low on that is 127.22. You're trading at 127.31. You know, there's a possibility that you could see a line drawn in the sand here. But, you know, and we're going to see that during the show, absolutely for sure. That's the last, you know, on a 30-minute chart, the high volume bar that I see out there, as you can see just going across the screen here. And this is what you want to be able to do, you know, with your charting tools to understand, you know, supply lines, to understand volume, to understand, you know, any areas in the sand. And you want to do this, you know, both from the bullish side and from the bearish side. You want to make sure that you've got stops in place. Let those stops get taken out, you know, because you will live to trade another day. Let's go take a look at the other 3 ETFs. Let's go take a look at the SPYs now. If we take a look at the SPYs, trading out 133.89 right now. And the SPYs are coming down into the swing point here at 10:30 on February the 7th. Now you can see the volume that's drawn across here, this red line drawn across here. The actual volume on that candle is 13 million shares. Now, when we gap down this morning, you gap down hard with volume, with conviction coming into that swing point. 21,900,000 shares. That's going into 13 million shares. So clearly you've got the volume coming down into the area. Now, what you're looking at from a bullish side, what you would be looking at is you'd be looking for that low to hold. You're trading inside that swing point. The low there, 133.64. If you're bullish, what you want to see, and you're not going to see it during this 30-minute trading session because it's 10:16, and you can see how volume just simply continues to pick up right here. And with volume picking up as you're coming into that swing point, you're going to have more than enough volume. The question is going to be, is it going to get all the way down there and actually test that? What you are looking for is how it's going to test this area. If it closes below, either on light, if it closes below the price of 133.64 with volume, meaning if it does it in this 30-minute session, then it absolutely has the volume. Then that's telling you there's lower prices to come inside the SPY. If you get down and you test it, meaning you would test it, get down below the price of 133.64, closes back up above it on lighter volume. That's what you want to see from a bullish side. From a bearish side, you want to see it crush that price of 133.64 and do it with volume. Let's take a quick peek at the small caps here. Let's go look at the IWM on the 30-minute chart. That's what will pop up on the screen. The small caps coming into the gap that was created on February the 2nd. Now, that swing point going into the close, that had volume of 4.6 million shares, and you can see as you came into it, you didn't get all the way down there, but in the first 30 minutes from 9:30 to 10 this morning, you were coming down into it with 6.8 million shares. So it's kind of saying, even though you didn't get into the price, 6.8 coming into 4.6 million shares, it was telling you it wanted to hit it. It's attacked it right now. The bottom of that swing point is 81.06. Again, 4.6 million shares so far. In the last 18 minutes, what you've done is 3.3 million. Seems to me like it's got the volume. The question now, that's our line in the sand, if you will. If we go back up and we try to identify any high volume bar out here on the small caps, what you're going to see is the highest volume bar that we have is right here. That is at the 10 o'clock time frame going back to January 31st. The high on that is 79.82. Now, what you are trading at, you're trading at looks like a 0.786 retracement, just simply off of the close from February 1st. Let's take a quick look at the Qs. That's the last one here. And then that will go to break, and we're going to come back. We'll go to Nick in Orlando. Hopefully Nick is on his way over to see Tom to give him a big bear hug. Now, as we're taking a look at the Qs, that is the strength, if you will, in the marketplace. In fact, somebody sent me an email during the break, said that this is NBA. Nothing but Apple. That's a cool. He said that. Hear that acronym on CNBC. Now, we take a look at the Qs. The Qs are coming into the 11 o'clock swing point, 4.4 million shares. That 11 o'clock swing point on February 9th, you came down into it with 6.9 million shares. So you're coming into there with 7 million. You can see the line is in the sand, the tug of war. Really, it's in the Qs. It's all about Apple. Up 68 cents right now. 877-927-6648. We'll be right back, folks.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective and maximize your returns. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. I'm your half of the host, Steve Rhodes. The other half, Tom, is from the Money Masters. The other half is in Orlando. Let's go to Orlando right now. Let's go to Nick in Orlando. Nick, thanks for calling. Thanks for holding.
Hey, thank you very much. I'm very grateful for all that you do for us.
Well, thank you. I really appreciate that. Now, are you going to go over to the Gaylord Palms, give Tom a big bear hug for me?
I wish I had time to. I can't make it over there.
All right. That's great. Nick, you wanted to take a look at what, Glamis Gold? Or
Gold Corp.
Gold Corp. I'm sorry, Gold Corp.
Looking to see what a good entry point would be. I'm not sure if gold is done selling off here in the short term or not.
Yeah. Are you watching? Any chance you're watching this on Tiger TV or?
I'm kind of in between things, so
okay.
I'm just listening on my iPad.
Oh, I love it. Hey, you can watch us on your iPad on Tiger TV. Now,
yep.
What I do have up on the screen is the daily chart. Folks, the ticker symbol on that is GG. And so is there a target price that you had in mind? What have you been looking at so I can help you clear the air?
I was looking at maybe getting it in the low to mid 40s and then swing trading it maybe up to the upper 40s.
Okay, so that's great. So what you've got today is, and what we're taking a look at is January 25th. On January 25th, you had a pretty nice break. In fact, it's a nice candle formation after you went sideways for a bit. So Gold Corp was going sideways, if you will, from the early part of January up until the January 25th time frame where it decided to break out. Did it with some volume, 10.5 million shares. I like the candle formation that's down there. You're trading into it right now. You've got just simply an upward sloping line that would say in the 44 range. What I would do is wait to see if it can pull all the way back down into where it broke out at the $43 and 63-cent range. Now, if I just dig down here, let's go a little bit further down. Now, that was a daily chart, and we take a look at the 30-minute chart just to see, what we're looking at here. I would, before I would nibble on it right now, I'd wait to see some type of confirmation, a candle with some volume. Otherwise, I would really let it get back into the breakout area, into those low 43 range. I think that would be a nice buy. And as you said, in this case here, you're pretty much just taking a look at a in a swing trade here. If we take a look at also at the daily chart, you know what you could also do. So let's take a look and see about the Fibonacci retracement going back to the bottom here from December 29th all the way up to the high that it put in on January 31st. So the 0.618 area gets you in at $45. And what is pretty cool is 43.70 is the exact 786 retracement, and 43. The low is 43.63, happens to be the low of that January 25th bar. So I don't know whether it's the 45 or the 43.70 that's going to work as the better entry point. When we take a look at just simply the average true range that Gold Corp has, folks, and the average true range, and it's so important to understand this when you do get into a trade. You want to make sure that, one of the things that folks do is they'll make stops way too tight. And you don't want to do that because Nick or I, even though we might think that this is a good trade, we still don't know exactly where it's going to stop. Or do you know where it's going to stop exactly, Nick?
Nope.
Okay, and exactly. And so what we do when we do get into the trade, what we want to make sure is that day that we get into trade, that we've given ourselves a wide enough berth there. And the easiest way to do that, especially in these volatile marketplaces, in any marketplace, but is to understand what the average true range is. And I've got a position size calculator. It's on the front page of TFNN. You can use it for 30 days for free. There's a video, shows you how to use it. And this just, folks, is just simply, if you're watching on Tiger TV, you're seeing the information that's contained in there. You just simply type in the ticker symbol, hit the search button, and it'll tell you in this case here what the average range from high to low is, and that is $1.36 on Gold Corp. And, today, just to check it out, now it's more than $1.36 today because yesterday's low, if you will, was $46.55. Well, maybe not, $46.55. What did I say, $1.50? So $46.55, 40, yeah, about $45, and it's gotten down to a low of $45.42. So when you do get into the trade, though, go ahead and use that calculator. All right, Nick?
Okay, great.
But, I think if a great buy on this would be 43.63 if it comes in with some light volume.
Okay, great. Thank you very much.
You bet. Thanks for listening. Thanks for calling in. We do appreciate it. If we go take a look at the markets here, right now you got the Dow trading off 126 points, S&P's down 12, Composite down 25, nothing but Apple. The NBA playing its way out in the markets. You got Apple up 53 cents, holding the Qs. Qs are off. Where are the Qs? Can't see them. You got LinkedIn is up. You got Cobalt International, 877-927-6648. We'll be right back, folks.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. I am Steve Rhodes, co-host of the Money Masters. You can catch the other co-host over in Orlando. Tom will be doing a book signing an hour from now over at the Gaylord Palms at the World Money Show. And, folks, go ahead, show up there, give Tom a nice big bear hug, if you will. And if you buy a book there, you're going to get 2 workshops. That's a $300 value plus. That's $300 value if you're going to go ahead and buy the workshop separately. Forget about the actual content value that's inside there. So go check that out over at the World Money Show. Right now, you've got the Dow's off 125. S&P's off 12. Let's take a look around the world here. You got the DAX, which is going to close in just less than an hour, trading down 95 points. It's off its session lows. FTSE down 41. Over in Asia last night, you did have the Shanghai was up 3 points. The Nikkei was down 55, and the Hang Seng down 226 points. I've got the DAX up here on my screen. We were showing the DAX here, completed an A to B equals CD. The actual price projection was like 68.33, and where the DAX actually got up to was 68.38. Gotta love that. Completes that A to B equals C to D both yesterday and the prior session. Obviously, it is off those highs. Nothing of significance just yet. So the question is going to be, is this just going to be a slow roll to the downside? And we just simply won't know right yet. But we will be able to get a gauge of it by taking a look at what's going on inside the currency markets or what's going on with King Dollar. Let's go take a look at King Dollar here right now. And as I was mentioning, it is important in my line of work for King Dollar to get above 79.30, trading out at 79.15 right now. Let's go ahead and take a look at what is moving in the markets and see if we can see True Religion. So let's take a look both to the downside and to the upside. So let's go ahead and take a look at True Religion. The ticker symbol on that is TRLG. and they sell some expensive jeans, as I recall. True Religion down to $27.92. It's got some volume that absolutely has come out of it. I know they had earnings released yesterday. Let me just type this in. TRLG. There we go. And I don't see it. I know that they did have I believe they had an earnings release yesterday. But what you can see here, it's down with some significant volume here. Don't step in the middle of this. It's trading right into the swing point here from October 4th. The entire move. It is interesting. Don't you think it's interesting? As the market picks off one stock at a time, and when it disappoints, just that October 4th point just really keeps sticking out there. Now, and you're going to find that in almost all of these stocks and ETFs out there on October 4th, when there was nothing but tremendous fear in the marketplace, and I don't sense tremendous fear just yet. When there was tremendous fear in the marketplace, the end of that session had that bullish engulfing candle. I didn't realize how many stocks until I started pulling things up one at a time, and either taking a look at stocks for clients, taking a look at stocks for the shows or what have you. But now the swing point that you've got down there on October 4th, the low on True Religion is at 24.86. The high there, 27.54. You haven't made your way all the way down there, but only 485,000 shares. You're coming into that area right now with 2.3 million shares. And you have been only open in the markets for an hour and 7 minutes. And so that says stay out of Dodge. If we start taking a look at where could this thing really trade back to, well, the next time that you see any kind of support, so this is beautiful how this works, you would go look at the February 25th candle. You did 2.7 million shares. Again, we're going to do more than that, but you can see how that area should give you some information if that is going to be an area of support. Why? The top of that candle is 25.10. The low of the candle on October 4th is 24.86. How do you like that? That's within 14 or 24 cents. That's not too bad on a stock that was trading yesterday in the 37 price range. That is True Religion. Let's go see what else we can hunt out here. Let's take a look at. Let's go downside, upside, downside, upside. So let's go look at Cobalt International. CIE is the ticker symbol on that. That's trading up $11 out at 47.45. It's up 47%. I'm sorry, it's up 47%, trading out at 35.17. Well, this thing here is a little rocket ship. Let's go see what the news is on this group here. What is the ticker symbol? Is CIE. CIE. Let's type this in, see if anything here pops up. Surge to new high on test results. Okay, so they've got some test results. Whatever those test results are, look at that little rocket ship here, trading out all-time highs. This thing has only been on the market. Looks like it had an IPO going back to December 16th, and so this was one you might want to stick on your watch list. Let this thing pull back, close the gap, if you will. So it's trading up right now to 6.7 million shares just in the first hour of trading, and that is on the upside. So now let's go take one over here on the downside, if you will. Let's go take a look at ticker symbol. Well, that's the direction daily emerging. Let's not look at that. Let's look at Gardner Denver, looks like. GDI. GDI is the ticker symbol. That is trading down about 8%. See where that is headed to. So what they, this and the symbol here, folks, again, is GDI. Did I put in GDI? I don't think I put in GDI. Let's put in GDI. Let's get the right symbol. GDI. I did have the right symbol. How about that? Okay, so GDI, and what that is trading down into is the swing point from January 20th, which has 2.5 million shares. The low on that swing is $70.78. This looks like it wants to be making an ABC down. You've done 1.6 million shares today. It has not gotten down to the low 70.78. Let's take a look at this. Looks like it had, you got several possible. Well, look at this. Look at this, folks. This is kind of a dangerous sign here. The danger sign here is when we take a look at where this thing last have any kind of significant volume. You've got 6.3 million shares, June 25th, 2010. The high on that is 48.87. And if we just simply, let's draw some ABCs here. Let's come from the high off of this stock, July 26th, down to the low, and my guess is that's probably October 4th. Sure enough, it is. We'll go take a quick peek, see if that happens to be a bullish engulfing candle on that as well. So now you can see the 1-to-1 A to B equals C to D, takes you down to $51.36. You got a 1 to 1.272, takes you down even lower in the $41 range. Now let's go take a look at this high volume bar out here. And let's take a look at, 6.3 million, the high there, 48.87. Let's draw our line across. So take a look at the real area, if you will, of support on any stock, and certainly on this stock right here, takes you right down to that high volume bar, which is just below a 1-to-1 A to B equals CD. Let's blow this up. Now, it was not a bullish engulfing, one of the few that were not a bullish engulfing on October the 4th. So that is on ticker symbol GDI, Gardner, looks like Gardner, Denver. Let's go back over to the high side. Let's take a look at LinkedIn. Let's see how LinkedIn is trading today. Ticker symbol on that is LNKD. LNKD. We'll take a look at LinkedIn. LinkedIn, really no great shakes, if you will. No huge volume. Certainly there is some volume compared to yesterday. You've done 4.3 million shares already today. What is LinkedIn doing? LinkedIn is coming right into the supply line here from the date that it came on the marketplace, where there were 30 million shares that traded. I don't think there's that many shares outstanding on LinkedIn. This is a fairly thinly traded stock out here. If we do take a look at what maybe is LinkedIn trying to do as it comes into that supply line, because it's already in there, if we take a look at possible ABC patterns, you would come right off of the bottom here. The bottom on LinkedIn that we're talking about is the swing point from January 29th, low of 55.98, coming all the way up to the swing point on December 7th. The high there is 74.94. If you come all the way back down here, you can see that what LinkedIn did was it completed a 1-to-1 A to B equals C to D on February 3rd as it was gapping up. And did it gap up? Let's see, the session before closed at 77.84. And open the day 70. No, so did not gap up, but you did have some decent volume on February the 2nd and February 3rd. Could this be making another A to B equals C to D? It absolutely could. Let's take a look at what that smaller A, B, C, D looks like, because if we just come off the bottom here, February 1st, we come all the way up to the high that was made on February 3rd. What you can see is a retrace to the 0.786 area. We are up over this smaller ABC, which is February 3rd. That only had 3.4 million shares, so we know that we're up over that with volume. If we take a look at that small ABC, see if that has completed already today. The 1-to-1 is at 85.11. It's trading at 85.12. Right now, that is on LinkedIn. If it does a 1 to 1.272, takes it up into the $89 price range. Let's go take a look at, let's see, Google's trading off. No great shakes there. That's just down $5 or $6. Let's take a look at First Solar. Haven't looked at First Solar for a while. May not really be much to look at there. That is trading down a bit this morning. FSLR trading off $4. And as I said, really not much to look at there. That was a waste of your time. My apologies for that. We won't let that happen again. Let's go take a look at Broad Vision, BVSN. Broad Vision, BVSN. Let's go take a look at that stock. That is trading down a bit. Oh, look at this little rocket ship. Holy cow. What the heck happened out here? Here's a stock where you got 3,500 shares, 19,000 shares, Broad Vision. Man, oh man, look at this little thing here. Now, trading down today, trading out at 36.35. You came off. Look at that. Holy cow! Look at all this accumulation going on with inside this stock. And let's take a look at the ABCs on Broad Vision. They'll just maybe come right off the bottom here, up to the high that Broad Vision made on January 24th. Down to the low, and almost completing an A to B equals C to D, taking it up into the $46 price range. But what you can see, and what's probably more important for you to look at when we take a look at this stock here, let me erase that line, is just taking a look at the area of support. Where the line is drawn in the sand, you always come back and take a look at your charts. You identify high volume candles, if you will. You can see that the high volume candle is January 24th. Broad Vision is 3.2 million shares. The high on that is 34.13. You can see how this area here has acted as a good support as it has pulled back into that area. So that swing point continues to be tested, was tested again this morning, and the volume on this pretty light, 287,000 shares. That is on Broad Vision. Let's go peek back over to the ETFs, the 30-minute charts. When we started out this morning's show, we were looking at the 30-minute charts, trying to see where the lines were drawn in the sand for the day. Let's go take a look at the Qs, because it is nothing but Apple. Apple being up $2 right now, trading out at $4.95, and we identified this swing point right here, which was at 11 o'clock in the morning, going back to February 9th. The low there, 62.32. We see that had volume there of 4.4 million shares. Came down, was tested with 6.9. Still rejected it. Came down with 5.7. Still rejected it. Right now, it'll be interesting to see if you're just simply going to bounce higher on lighter volume. You've got 2 million shares. You have only another 13 minutes to finish this trading session here. And so the question is this really just setting up an A to B equals C, D down? This is, again, on the 30-minute chart, and you're going to have some type of feel because the line is drawn in the sand at the 10 o'clock open. Again, we're looking at a 30-minute chart, so it's important to take a look at how the highs are tackled. 62.56 is the high there. Again, if you get a close above that, then you could go ahead and drift higher. Where would you drift if we just simply take a look at this 30-minute chart? Going from the high from 3:30 in the afternoon yesterday on the Qs, you made a high of 62.98 all the way down to the low this morning. What you can see is you now have done a 0.382 retracement or bounce. And then what you've got is, the 618 is 62.70, 62.82, but it first has to get above the 10 o'clock session, has to get above 62.56, and right now it has nothing but light volume on its bounce here. If we take a look at the SPYs, the SPYs are still struggling. Let's go ahead and blow this up for you. SPYs are struggling to get up over that 10:30 time frame on February 7th. That is the swing point that the SPYs are trading inside right now. That had 13 million shares. You came down and punched down into it. You're still trading below it. You came down into it with 21 million shares, then 18 million shares. In this last half hour of trading here so far, you've done 7.5, and you have 11 minutes to go in the session. And it has tested the top of that swing point. And so, no information here other than the information that it has had some volume on the way down, and it did not test the bottom. If we take a look at the diamonds, let's go over to the diamonds, see what the Dow Diamonds are doing here. Dow Diamonds testing that swing point from 10:30 on the 7th, 632,000 shares, still trading inside that swing point as well. We do know the line in the diamonds that's been drawn in the sand is the 4 o'clock close on January 25th. 877-927-6648. Dow's off 126. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider, David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Thanks for joining me. And again, you can catch Tom. He will be signing books in about 36 minutes over at the Gaylord Palms over at the World Money Show. And then you do have Basil Chapman. He is on the on-deck circle. And then he's going to, following Basil today, you got Nico DeHaan. He's going to get us healthy and wealthy. It's a beautiful thing. David White is going to be in at 3 to 4. I will be filling in for Tom 4 to 5, and Ken Shreve from 5 to 6, folks. And at about 4 o'clock or so, or perhaps just a little bit before that, we do have our Go Long America tour. Tom and I will be coming out to Denver on February 21st. We'll be in Spokane on the 22nd, San Francisco on the 23rd. Now, what I do have up on my screen here is the S&P 500. S&P trading off 11 points right now, down at 1340. 38, if you will, and the real area of support on the S&P is going to be this down trend line that we've got that goes all the way back to the highs of October 2007. That trend line is coming at descending tops trend line, coming all the way down into the May 2nd area, into the highs that were made here in the market in January 26th, and that is going to be an area of support. You break through that, and then it becomes a relatively simple exercise here. Let's just go take a look at that exercise. We'll take a look at some Fibonacci levels and see where you would bounce to. Now, there's really 2 areas when you're taking a look at this, folks. One, you can come over to the C to D point, if you will, which would be November 25th is when on an ABC up, The S&P was making that pattern all the way up to the highs that were put in on yesterday. The 0.382 area would take you into the 1279 range. You break through that, you would normally come to sweet 618, if you will, or the 618 retracement area. That would take you down to 1233. What you would also do is go down all the way into the lows of October 4th. Why do we want to do that? Well, as we take a look at stocks that are getting picked off to the marketplace, we're seeing that when they do fall out of bed, many of them are falling down to October 4th. There's a lot that have volume down there, and that's the reason why they are. If we come and we take a look at that, let me get rid of some of these lines here just to make it a little bit easier for you. Let's get rid of the, and you take a look at that wider swatch, if you will. 1247 is the 0.382 coming from the October 4th lows all the way up to the highs on February 8th. Quite frankly, folks, if the S&Ps pull back to 1247, there's still nothing wrong with it. I mean, nothing wrong with that chart, if you will. It still has some strength in it. And again, at 1247, let's put this back up here. Around 1247, 1235 is where you've got the 0.618 retracement just simply off of that last leg. So that is in the SPYs, but, you know, the bulls, they still have a chance. Just like in the last 4 or 5 trading sessions, you know, in the towards the end of the day, you've had the bulls having a bullfight, if you will, and pushing the market higher. The only way that is, let's go take a look at the ETFs out there again on the 30-minute charts and see what it is that we have. We know that the lines have officially been drawn. The lines have officially been drawn in the sand here. We know where the tug-of-war battles are taking place. You know, if it's going to be anything, it's going to be the Qs or going to be Apple. Let's go ahead and pull up Apple. It's something I haven't done for 2 hours. So it's nothing but Apple. AAPL. Just had a total brain fart there. How about that? If we take a look at Apple, you got Apple trading up. You had some decent volume yesterday. You absolutely did. 31 million shares in Apple. The high on that is 496.75. You're trading at 495. It's actually gotten a little bit over that. So stay tuned, folks. Basil Chapman coming up. Tune in from 4 to 5. Thanks for being here. Make sure you check out the webpage if you're in the Denver, the Spokane, the San Francisco area, because Tom and I are going to love coming to see you. And have a great morning, folks. Stay tuned for Basil Chapman.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a